The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach, dear friend, do we go. So we got a fairly exciting day, like most as of late. 26.46 on the S&P cash. That's up 42 points. I think we were up maybe 4 points higher, 5 points higher. And just kind of taking a breather here at the 2 o'clock hour. Dow's up 386, NASDAQ's up 131. We've been looking for this market to continue to bounce higher. I had two different themes. One, that we tested our previous low on much lighter volume. If you look at the entire volume of the market, we tested our previous lows back in February that had about 12 billion shares with about 7-8 billion shares, depending on which way you want to look at it. So significantly lighter volume, so we wanted to go bounce. One of the other things, though, is we did have some stocks that had high volume all the way down. I then talked to you about the rule of alternation, i.e., if it was straight down, look for a very convoluted move back higher, and that is what we have. I've been buying stocks and one ETF in the daily, added to additional positions in the Tech Insider on the pullback. And I think we've done the right thing. You never know the future, but you do know the past. And everything I've looked at, including questions about what somebody else asked me about, or what someone else forecasts the market as, I would just say, because I got several emails today, why can, someone be long and someone be short and everything else? And I guess it's I'll answer this question this way. Why could same jurors hear the same facts in a court case and come up with a different conclusion? We look, for the most part, as technical analysts at the same data. We may look at other data, and people come up with different decisions. Any one method won't always be right or always be wrong in the stock market. Some people weigh one thing more than another. And I guess it's no different than a jury. You can come up with a different opinion when actually set up by the exact same set of facts. I suspect, though, that for the plays that I have, that I can give you the rationale, which is what I give you almost every day. My trading's pretty simple. I look for stocks that either test highs on half the volume or lows on half the volume. That's not an ambiguous signal. So if I'm long or if I'm short, it probably started with a stock that tested with the highs or the lows on 50%. So I don't spend a lot of time listening to other analysts' calls. I might have a lot of interest in what they're looking at, i.e. individual stocks, what people are calling in about. As I said on Friday, when I got 10 emails asking me about Micron, or Thursday, it's Thursday, and it was down like $3 the next day. Anytime everybody's all excited about something, I generally go the other way. It's always done a fairly good way, but I think everybody knows the way I trade. If you don't, you get my newsletter. It's basically a bunch of charts of stocks testing previous highs and lows on half the volume, and I go from there. There will be other things that I don't spend as much time on, but I did want to bring up one thing that I do look at, and that's the put-call ratio. On Friday, we had 70% of all new, let me put it this way, 70% of all trades on buying puts that was a pretty good indication that everybody's on one side of the boat. If you didn't look just at volume, you would also see that. So look at PPLT. Okay, we'll look at that. But that's about it. There's not that much that I do. I normally try to find at any kind of move where I think that the market is at a bottom and try to buy the stocks with the lightest volume tested in a previous session. So that's kind of it. And normally, if you sit on your hands, you make some fairly decent money. It's a fairly easy way to trade. Not a lot of room for ambiguous moves, i.e., it either tested the previous low on half volume or it didn't. If it came down on more energy before it tested that volume, well, I kind of figure that those stocks will have at best a U bottom or maybe break that bottom. But I still use volume. It's just where volume gets tested by half of what it was before. So that's it. Let's do a little bit of history. We'll get into some charts and some other things from last week.
And it's all just a little bit of history repeating.
On this day in 1865 at Appomattox, Virginia, Confederate General Robert E. Lee surrenders his 28,000 troops to the Union General Ulysses S. Grant, effectively ending the American Civil War. Forced to abandon the Confederate capital of Richmond, blocked from joining the surviving Confederate forces in North Carolina and harassing constantly by Union cavalry, Lee had no other option. And we put that period into rest. What has bothered me over the weekend was people actually calling for a new civil war, or at least encouraging it, and just bad acting by various other people. But the CEO of Twitter and Square actually asking for people to consider an article on medium.com that basically advocating civil war if they don't get their way politically, which I thought was pretty insane in the membrane. But what can you say about it? That there is a wide disparity about what's going on. But I don't know. Sedition seems like some of these guys are getting kind of far out on the limb when they look at it. And, of course, not much doing in that one. But let's take a look at Square. You know, CEOs acting nutty. Not a lot new out here. But never really ran across one that talked up armed insurrection. But there's a few of these people that are, I think they're starting to read their own press and starting to believe it. And that is probably the most worrisome part of what was going through my head this weekend. We'll talk about the others in the news. We'll talk a little bit about our friend, Mr. Zuckerberg. And then we'll get on to some other charts.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Of course, we got Facebook going to be in front of Congress in the next few days. And, of course, another CEO, well, I wouldn't say the CEO, another company acting badly. They banned some people using language directly from Stalin and out of George Orwell's book. Always always something to think about when you look at this. Of course, Facebook has funneled a bunch of cash in the last 2 weeks to what? It was 85% of the committee he will be testifying in front of will have gotten cash from him in the last 2 weeks. That may tell you a little bit about how that's going to go. So we'll figure that out. Of course, that leaves the two people that didn't get cash from him to ask the one big question that could absolutely sink the ship of Facebook, and that would be was the election of 2016, did they get any more data eventually than the candidate in 2012? We already know the answer to that, if you've ever paid attention to it. There is no difference. The only difference was that they got this Facebook somehow let data to a candidate that they do not like, opposed to in 2012 a candidate they did like. I think that one question, or maybe just messing up one, could cause Facebook big problems. But I think they only have one or two people that might ask the big question. Question is whether peer pressure will push that. I've not been a fan of Facebook. I've called it fake book forever. So there's no love lost with me. I pretty much instantly sum this up as a product that encouraged narcissism in our youth. And I don't see if anything in that has changed. I guess you could make it a better place, but I think you'd have to remove the CEO and CFO, who literally are unremovable, which always worries me when you are unaccountable. And as they say, total power corrupts totally. Forget who said that. But that's always the problem you have when people have basically ultimate power over it. But that's about it. I don't think that there's, like I said, man, you got to get two people to ask questions. The rest took cash. I don't know how they can. Maybe they'll be harder than I think. But I think that you're going to see these guys scoot along. But that's it. Yep, we talked about that. In fact, let's take a look at Snap, because many people were looking at Snap last week and thinking into these hearings that things may get a little bit better. They really haven't. I think you really have a good-looking chart here, so there's nothing wrong with the chart. You actually gapped up with huge energy on the 7th of February. You did so with 230 million shares. You're back into it with 20 million shares. So one of the best looking charts in the world. The question is, can these guys turn this company around? And I don't think you've seen a lot of push in this one yet. These guys should actually directly go after Facebook right now. I mean, maybe with policies and stuff like that. And you've heard bumpkus out of these guys, maybe because they've got earnings coming up and they're in their quiet period. But I would probably find a way like Elon Musk does to get around it, like a tweet or something else. But that's kind of, Snap's got an excellent opportunity here. All they need to do is come up with some better security policy for users' data. But, I think if they're not going to honk their own horn, then no one else will. What else do we have here? Give me a call at 877-927-6648. And you can email me at path@tfnn.com, or you can put a message in the den. I'm going to go to the first one I had here, which is PPLT. And I want to give a heads up. I think it was Mike in the den that told us that was a light something from last week. What was it? It's not on my list anymore. On Thursday, that somebody called in about a stock, or emailed about a stock that was possibly, at least what he said was he thought was a potential scam. And of course, they were Lightfish. What was that stock? Maybe someone will say what it is in the den. Anyway, the nice part of that was it did get halted for SEC violations. What is it? Longfin? That's what it was, Longfin. And it did get stopped with SEC investigations this weekend. I haven't had a chance to check it out. Edward Dahlberg, first Baron of Acton. Absolute power corrupts absolutely. And a letter to the Anglican bishop. Power tends to corrupt, and absolute power tends to corrupt absolutely. Great men are almost always bad men. So anyway, anyway, looking at platinum here, PPLT, you had a nice gap up on the 18th of December. You did so with 100 million share, 108,000 shares. Tested it with 60,000 shares on April 5th. You've gapped up a little bit today. I'm going to say that I continue to look at metals. Now, platinum may be different. There may be some other issue that I'm unaware of. In platinum, you certainly have a nice pop-up here with volume. The downside would be that this thing gets the taint of gold and silver on it. As I said, was it Friday or Thursday? It still looks to me like gold is in this triangle, and I would always wait for it to break out. Platinum is not. So maybe this is a totally different story than gold and silver. When I look at the chart, it certainly doesn't look anything like it. It came down, tested its gap, did so on lighter volume, and popped. So if you were long in platinum here, just from the chart, I love two things. One, the low volume tested, and the energy on the way back down. This had just half the energy on the way down from that January 25th high than it had up from the December 13th low. So an excellent looking chart, a good test of the low. I don't know enough about platinum and why it might move compared to gold and silver, but these charts look a great deal better than gold and silver at this moment. So yeah, everything you want in a chart in platinum, and maybe gold and silver come up from behind, but my guess is the first move in gold and silver out of this trading range that we've been in will be a head fake. So if you want to go long, you're hoping this thing breaks down for 1 or 2 to 3 days. I mean, gold goes higher. Platinum looks beautiful.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Great point out from Pete. Don't know where Pete's from. Pete from Earthlink. Pete from Lutz, Florida. Radian Group. And I looked at these and I couldn't find one and I forgot about it. And it's always one of those things that make you want to scratch your head again. I was talking about VNQ, the REIT ETF back in, what was it, January? And looking at that thing break down, and you had to figure that housing is slowing. And this is Radian Group, RDN, from Pete. And I had shorted back in 2007 a handful of these stocks that were mortgage insurance companies, because these guys basically, if anything pulls back in the housing business, these guys tend to lose it all. This one popped a little lower. The housing stocks are doing a little bit better, but the last thing you want to be in is a stock that it gets hit the absolute hardest on anything, including a slowdown. And these mortgage backed insurance companies, I'm trying to remember the name of the one I was short, because I remember it went to like zero in a heartbeat, so I don't remember it that much. But I just remember those companies getting hit and of course, all the big companies got hit on May 5th. Is that, yeah, May 5th, 2008? May 5th of 2008, if you go back and look at all of them, you'll see that if they still exist, if you can see the unchanged volume on that day, they were all testing previous highs on half the volume. In fact, I have the original charts, so I guess I should go back and look at those again. Yeah, you're down on heavy volume today. You're breaking through. It doesn't matter whether the housing goes to hell in a handbag. All it matters is if a handful of people go belly up and don't pay their loans off, these guys get the brunt of it. And one of the better shorts out here. Yeah, I'll have to remember that yet again. You pay high prices for things while you're learning the stock market. This is one I probably should have written down on any kind of sign of V and Q. Let's go ahead and look at that very quick. You can give me a call at 877-927-6648. Yep, mortgage insurer. This is the one I talked about when this thing broke below 80, that this is a very big deal. And we were looking at the rest of the market. This was the one big ETF that was breaking down in front of all of them, which I suspected mean that we were going to have higher interest rates, that they weren't going to blink. The Fed wasn't, that we'd at least get a few. I think we still get 3 this year. And, you broke through 74.69, but I think it was like $80, which is this move around March of 2017 when that thing snapped. That was the one I was looking at. We went through 74.69, which is the November 10th, 2016 low. And again, REITs, housing insurers, when things slow down and people have problem making payments, these things are the ones that are poster child. In 1929, the REITs were the biggest losers of all of the stock market. Almost all of them went bankrupt. And somewhere almost 70% of all losses in the stock market of 1929 came from REITs. So just they are the tail that wags the dog, so to speak. So just keep an eye on them. But a very interesting place to be at here. Okay, see if we've got anything else. Pete in San Francisco, okay. Marin rental price escalation waning analyst report. There's another one that I like out there. What is it? Let me find it here, because I always have it down here. DLR. Let's take a quick look at that one. This one kind of has me thinking that why we pulled back a little bit. I don't have a sign that this thing's going to hell in a handbasket. This is Digital Realty Trust. They do a number of REITs around the San Francisco and other high-tech areas. So I was looking at this, and it's kind of looking just like the VNQ is. I don't know if that means this thing goes for a month or so sideways before we see another test of the low. But I think you have to look at a test of this low at 96.56. My longer-term outlook, as I've said probably for the last couple of weeks, maybe a week, has been that we are beating out a bottom, which we haven't really done like this, back to probably, could it be 2007? Been a long time since I can remember one that played out like this, that were fairly regular. And if you go back and look throughout history in the stock market, these kind of bottoms that I think we have right now, this this U bottom that's being beaten out, certainly is fairly standard in the way stocks traded forever. But I continue to think that we kind of slowly move back higher into the last week of April. And at that point, as we look into May, if we continue to go up on very light volume, that sets up the move into May. But I don't see anything. I mean, this test of the low on almost half the volume for the broad market makes me think that we continue to go back up. And I can't forecast that that's what's going to happen, but I can speculate that I wouldn't want to be short until the last week of April, and I don't see any difference today in my call on that. As I was saying in the den, I think other places, anything above 26.18 on the S&P cash is at least a few weeks bullish. And of course, we're actually looking at a week where we're getting into expiration. That'll be on the 11th, and we've got a 1.5% bullish bias all the way to the 20th of the month. We didn't have that, I think, the last couple of months. But 80% of options expiration are going to be bullish, and that even goes through bear markets. Again, bear markets go down about 25% of the time. I mean, you're getting lower prices. It's just that they're so huge that the other 75% of the time when the market's recovering, it doesn't go up that much. So, the whole thing is trying to stay out of markets where you slowly get squeezed out higher to get ready for the time when the market's ready to fall. And, you can make cases for either a bullish or bearish move. I just think we have fairly clear signals that the next few weeks are going higher. What else do we have? Well, we'll start looking at the more chart. You got plenty of time to email me. Thanks for the emails so far. Give me a call, 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks! Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal is 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And I knew there was some more out here. MTG, and this one got whacked too today. Let's see what the headlines are on this one. Insurance is up in force to 197 billion from 183 billion. Non-hurricane delinquencies of 3,500. Couriers of press rating down today. Anyway, there are a bunch in this sector, and I guess I probably should have kept a closer eye on this. I do want to go through a handful of others. There's okay, what do we have here? Let me get this out of the way. Magic, Old Republic, which is ORI. Let's take a look at that in this space. I haven't thought about these in a while. Old Republic. This one's down a little bit, not as bad. Now, you're going to need to dig through these things. I'm not exactly sure that's in. Of course, this is in the same sector that RDN is in, and Magic Investment and Genworth. So let's look at that. Radian Group, okay, we looked at that. Let's take a look at Genworth, GNW. To Genworth Financial. This thing's been going down forever, so I don't know if there's any, you can't short that. Ellie Mae, CoreLogic was kind of interesting in this housing sector. Let's take a look at it. CLGX. Yeah, this one hasn't fallen apart quite as bad. It's just doing sideways. No reaction from it today. These guys are in the analyst. They analyze data for all these housing companies and do a little work for title companies too. What else do we have? FNF, which is Fidelity National. It's down not on a whole lot of volume. Had more volume on Friday. There's a lot out here that you probably want to dig into if you're thinking the market's going down, especially if any of these, like this one, are in the $30, $40 range where you could actually potentially short these things. Maybe in the next 2 weeks you get enough of a bounce to get back in these. This one is down to $33.91 on October 11th. And that one would be kind of interesting. So a handful of interesting stocks. Let's go back to the ones that I was talking about last week. Oh, he's got another link out here for people in this sector. Yeah, a whole bunch of them. If you want the link that I was sent on this whole sector, just give me an email at path@tfnn.com. Okay, what else do we have? Let's take a look at last week. Let's look at the second, because a lot of these stocks that were testing the lows, we'll see how they have done. Air Lease, we brought this up. It tested its November 15th low with much lighter volume. It went and hit heavier volume on Friday. So that's kind of negated that trade. Not exactly sure. I think Boeing actually had some pretty good news. Let's take a quick look at that. BA. Yeah, not doing much on its sale. I think everybody's too worried about tariffs still. Not much volume, not much movement. Let's take a look at Alaska Air Group. This did bounce back into the trading range. It's okay. Let's take a look at Beezer Homes. Beezer Homes, Lennar, all these things actually showing that maybe housing's a little bit better than we thought it was. Patterns on these look good. February 9th, 1502. On April 2nd, you got to $14.86. Volume shrank by about 2/3. So a fairly good bounce off of this, even good volume into the 5th last week of 860,000 shares. Pulling back a little bit here, but you ought to be to about support at $16. And I don't know why the disconnect. Maybe people continue to buy new homes, but maybe some of these other ones that people are already in starting to see some delinquencies, and maybe it's a regional thing. Again, one of these things where you have to do a lot more homework to figure out what's actually going on inside of it. Cirrus Logic was one of the semis out here that has broken below its previous low on lighter volume. April 4th, you had 1.2 million shares. Today, you've got 600,000 shares. So it still isn't back in that 39.51 or above area. So Cirrus Logic kind of sitting on it. I said that the SMHs would probably be some of the weaker part of the market for a while because these things have come down. A little bit of a bounce out here. You would really love to see the SMHs come in here at 93.88 and get their low in. So you got 17 million shares there. So probably a pretty good indication that if you did get there, that's where the support would be. Let's take a look at another one. DY. Okay, let's get back to some of the stuff I'm looking at. Is this it? Okay, let's close that. Get back here. Okay, we're at 2641 on the S&P cash. Let's take a look at volumes here. 3.8 billion shares. We had about 7 billion shares on Friday. So volume increased just a little bit. So I'm not a Pollyanna about higher prices in the market. I just think we have higher prices through the last week of April, at least at the moment. Wouldn't be surprised now that we've kind of had this really tough U-bottom kind of put in. Doesn't mean we can't get yet another pullback and see these things ratchet all the way higher with people getting shorts. But I wouldn't be surprised to see these things kind of, at least for a couple of days, not have any volume. And then we're probably going to get some good news maybe on Thursday. Maybe we get past Facebook, we get some good volume on Thursday with a lot of those financial companies actually reporting. If they don't drop the chalupa, I think that's probably where we start seeing volume come in and move it higher. Vago was stronger when I looked at it earlier in the day. This one has moved. Good test of the low. I would have liked to seen it go $1 lower, but the volume's low enough from the February 6th low of 224.90. 7.7 million shares to the 5.3 million shares on April 2nd. The reason I don't like getting into a lot of these semis is that the energy came off these highs with more volume. The volume dried out at the lows, which is fine. But if you come down on higher volumes, one of two things normally happens. That is, you either go into consolidation or you break lower. So any of these stocks that I see high numbers on my power law vector indicator on the way down, I'm assuming probably underperform on the way up until they get that consolidation out of the way. We'll be back after this. Plenty of time to give me a call, 877-927-66.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation as ranked by Timers Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And I posted a list that one of our wonderful emailers sent me in the den. I've got them up here, too. So if you want those, just email me at path@tfnn.com. We'll share the wealth. I don't know if it's wealth yet, but certainly can get at-risk real estate connected companies, not so much the real estate companies themselves. But again, you probably want kind of a bounce out of here before you want to go after those stocks again. They've kind of had a tough and bad hair day already, or at least some of them. Wanted to go back and look at what I was looking at before, which was scans was second. We looked at Garmin last week. I wanted to check back in on this one. This one's got some very good support levels at 57.50. We've bounced off that a few times. It didn't have more energy on this last move. In fact, let's zoom in on this one. So I wanted to see how this one did. It had a nice bounce off the March 2nd low up to the March 8th high, pulled all the way back over many days to April 2nd. You had still lighter volume. That gap is acting as support. And not a whole lot yesterday. Light volume, very light volume today. So no signal yet that you'd want to get on board with that one. A handful of other ones out here. Let's take a look at the OIH today. OIH, looked fairly good last week. You are higher. It's not a lot higher. But you had a nice test of the February 9th low, 22.95 at 17.6 million shares. Got into it with just 7 million shares. So, you get a little bounce out of here. Certainly do have some support around that $23 level. So you want to keep an eye on that in the last little bit. Is there anything else? I think that's it. We've ran out of time today. I learned a lot. I hope you did too. In the meantime, sell when you can, not when you have to. And we'll see you here tomorrow. Same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.